Hello, traders. Welcome to today's live stream. It's Thursday, the 18th of July, and we've just had some big data. We've had some big data, and the market has done pretty much nothing. So it's been a quiet trading week this week. Welcome to everybody that's joined the live stream. I can see there's some messages in here already. We've got Beatrice. Waiting for the best analyst. Thank you. Big up Blueberry. Thank you. I appreciate this. This is a nice welcome message to come into. I appreciate this. You always join the market analysis. Well, thank you very much. Thanks for taking your time to come and watch the live streams. I really appreciate you dropping this comment. And yeah, hopefully we continue to show you some really good analysis, and hopefully it benefits your trading in some way. CG, welcome as well. I've got some really interesting analysis to show today. Really interesting analysis. I'm going to do a little bit of a deep dive into a couple of markets that I'm keeping my eye on. And I'm going to take a look at some commitment to trader reports. We're going to take a look at potentially some seasonal analysis as well. And yeah, there's a couple of markets out here which I think could really get going in a couple of weeks or so that I really want to try and stay on the right side of. So we're going to go through some of that data. I did a video about a bit of it yesterday. I don't know if you managed to catch it, but a little bit of Swiss franc strength coming into the market recently. So I quite like the idea of looking for that across the board. And I'm going to kick it off with silver, though. We're going to kick it off with silver because there's some interesting analysis. But before I get into that, I just want to say hello to other people as well. Hi, Bruce. Welcome to the live stream as well, Vincent. Always there. Yeah, and I'm glad, Beatrice, that you keep learning from the streams and from the videos. It's why I set out to do what I do. So yeah, really appreciate you dropping that. So it's going to be a big day. Let me know what you guys are up to, what charts you're trading, what charts you want to take a look at. How's your trading week been? You know, it's been a very interesting trading week, hasn't it? We've seen a lot of volatility rising. We've seen a lot of stock market declines and things like that. So I'm interested to see your thoughts on that. So let me know in the comments down below in the chat. Get chatting to me. Say hello. Drop me a message on charts that you want to see. I'm going to kick it off with silver. And the reason why I'm looking at silver is because we've been very bullish silver, right? We've been very, very bullish silver. But now a signal has appeared. A signal has appeared that makes me not really want to be buying silver right now. So although we've been bullish since $22, which I'm going to brag about because it was a really great call in the markets. We were down at this $22 level. This was the level of support we were talking about being buyers from, especially when we broke into that sort of 23.80s. And look at the market. It's had an extensive rally. However, might be time to just park this move a little bit. And the reason being is because of the commitment of trader reports. And I'm actually eyeing up a potential short in and around this area right now. The reason being as well is because we've had this really nice consolidation. The market broke that consolidation just from a technical point of view. This is, and typically when price comes back into this zone, what I would be looking for is another move away from that into that $32 level, which was our overall sort of target for those longs from sort of $22, which we came into nicely, rejected a couple of times. I was expecting a little bit more upside out of this market because of what's happened with gold. I was expecting the sort of gold filter to come over. You know, it's a cheaper commodity to buy. It's a cheaper commodity to invest into. And I felt like maybe the market would move from gold a little bit into silver. But we're not seeing that. We're not seeing that. And I'm going to bring in some commitment to trader data. Okay. So this is what I'm looking at. There's a few things that I want to take a look at going into today's session. Just got to give a shout out to Ray Markets Made Clear. They give me a little bit of access to this so I can have a little look at it and have a little play around with it. So I'm going to use this today. Obviously, we usually use free data as well. And there is another free data which I wanted to show you, which I found recently from looking on Twitter. So let me see if I can bring this up for you. And it's called, Here we go. Let's bring it in. This is absolutely free. Okay, it's called cotreports.com. Okay, and they give you certain reports. Okay, it's a free tool, so you know me, I like to always kind of show you the free tools because I don't believe you have to pay for all the tools, especially when the commitment of traders data is free. You can actually download it from the CFTC website yourself and update your own sort of version of it, which I suggest you do. You have a little look at doing. But essentially, they've got all the data here that you need, especially when you're looking across the board, essentially, of what's going on. So if you do want to come and check out this website here, I've not particularly used it before. It's just the website that I found recently via Twitter. So I'll drop that into the chat box and you can have a little look at that on the commitment to trader report side of things. But I'm looking at markets made clear. I'm looking at markets made clear. And there's a few signals here that I want to take a look at. And one of those is being silver. Okay. So essentially what we've got here, or the way markets made clear works, it measures the index over a 6, 18-month and 36-month period. And it compares the contracts with the prior months, right? So if we see a 0% here, it basically means that the short contracts are at their highest levels for 6 months, vice versa for 18 months, vice versa for 36 months. So it gives us a little bit of idea of where the market, especially the commercials, are positioning themselves, as they can often lead to tops and bottoms in the market. Okay, so looking at silver right now, we have a 36, 18-month and 6-month sell signal. Okay, that doesn't mean you go and sell the market. Okay, you don't do that. It just means that we've got that. Okay, and to be honest, it's not a timing thing. Okay, commitment traders is not timing. It's just telling us what the bigger players are positioning themselves in the market, where they're positioning themselves in the market. Okay, so what we can see here is a weekly chart of silver. You can see the commercial index as well. We've got a 36-month and we've got the compositions, non-compositions. You've got longs, short, and the net. Okay, so essentially what this is telling us is that we're at a potential short phase. Right now, you can see that we've had this signal on silver for a little while, and this is why I say it's not very good at sort of timing the market. Okay, because you can see we had this sell signal coming in here and the market continued to drive higher. Okay, but the difference between here and here is the fact that we've retested previous weekly highs. Okay, we've retested those weekly highs and rejected it. So I'm interested in, is price going to stay within this range, and is this going to give us a little trading idea? So if this is the weekly range, are we going to see price come back down towards those weekly swing lows, right? So that could be a potential trading idea for us. When looking at the contracts as well, we can see that we haven't really come back into the sort of range of short contracts where we had that initial drop. Okay, you can see here, this, if we highlight the area where we started to see selling, you can see down here on this red line where you've got the peak in contracts. We're not back at that level there. Okay, so again, not looking for any kind of huge reversal on silver, just looking to see maybe can we come back into this area here. If we go take a look at the non-commercials, what are the non-commercials doing? These are the trend followers in the market. You can see that they have decreased their short positions, increased their long positions. So that's managed money. Okay, that is managed money. So I still feel like the market might play within this range. Okay, so when we go take a look at the chart, what does that mean? Well, let's go up to the weekly chart and just zoom in. Okay, what it means is, for me, price might be trying to stay within this boundary here. Okay, this is the boundary that I'm looking at. I'm looking at this potential move from the swing highs down into the swing lows. So like this, basically, right? Looking to see it continue to do that kind of move. So if that's the case, and we've got this nice bearish weekly close, you can see that we tried to flip bullish. We're starting to break through those lows now on the weekly time frame. Could we look for a potential idea? Well, one thing I like to look at is the 4-hour chart, and I like to look for areas of consolidation, because consolidation is areas of volume being built, right? And you can see this consolidation through here. And what we had was price broke through it, showing us that buyers were getting involved. However, buyers couldn't sustain the buying pressure. Okay, they gave up. Price came into here, they gave up. Sellers drove prices lower. Quite interestingly as well, if you think about it, dollar sold off quite aggressively, right? Yesterday. We didn't see silver benefit from that, even though silver is pegged to the US dollar. Okay, so that's giving us a picture as well. Why isn't this rallying as the dollar gets weaker? Is it because underlyingly the commercials have been selling aggressively on silver, which makes sense, right? Because price has gone from $22 to $32. And if they're producers and if they're looking to basically sell more as price moves higher, then we are going to get to a point where the balance of the scales is going to tip, right? And this is what I'm kind of looking for right now. I'm looking for this potential. So we've broken through this zone. We've come back. We've retested it here. Now, there's two ways you could look to potentially have a look at this. First of all, you can go to your volume profile. We can have a little look from the swing high to the swing low, and you can try and pick out volume within this area. Okay, so you've got this little bit of a zone up in towards this kind of $30.65 up towards that $30.99 handle. Okay, so you could be a little bit more patient and you could try and see if price pushes this zone before looking for the continuation to the downside. The second idea is looking at the price action within this area, right? Because if we're going to get move down, move up, move down, move up, move down, and if this is going to be another impulsive phase, what we should see on a lower time frame, let's say the 15-minute time frame, right? We should see lower highs and lower lows form, right? So if we go check out the previous sort of impulse legs, let me just delete this off. You can see that the market forms consolidation, breaks out, lower high, lower low, lower high, lower low, right? That changes and we get a pullback phase, right? Rally even. And then we change again. The market makes lower lows, lower highs. Then we start to higher highs, higher lows, right? This is what I'm always trying to get you to have a little look at, is look at the phases within, look at the trend within the higher time frame phases. Now look what we've got down here, right? The market is breaking through this little bit of structure there. And we can see prices failing to get through that, right? So I like one or two situations here, because my theory now is if the market is going to start to now go into that lower low, lower high pattern, then I'm looking for a lower high to come in for an opportunity to trade to the downside. So that's what I'm looking for now. You can argue we've kind of had a little bit here. There's a little bit of chop going on. So you might want to just say, well, okay, well, I've kind of met my criteria. But then I'm looking at risk reward, right? I'm looking at where's the safe stop. So your first safe stop is going to be sort of 30.63. The safest stop is going to be above $31, okay, because you've got lots of price action in the way, especially this volume up here. So if I drag to where target one's going to be, that leaves me with a 1.5R, right? So I want to try and maximize that to the best of my ability. So essentially, can price even come and try and test these highs again and fail? And if it does, then I've increased my risk reward ratio. I've increased the chance of getting a bigger reward to 2.6R, right? So that's what I'm kind of looking for here now. If price comes in, trades back to the upside, starts to fail here, then I like the idea of trying to trade this to the downside. Okay, I like the fact that we're breaking lower. If we go up to a 30-minute time frame, you can have a little look at the fact that we've kind of broken through trend line support. So, you know, this candlestick here at 30.41 has broken through that support, and arguably that's a nice trend break there. But ultimately, I want to be short at highs, right? I want to be short at highs because that's where I reckon the most selling takes place. So I'm looking for a bit of a pullback. So I'm going to set an alert around about $30.55. And if we push back into that, I'm looking to potentially try and capitalize on a little bit of a short move here. Safe stops are going to be above this high. If you want to go aggressive, you can go super aggressive, but that is completely up to you. You can wait for price action change and then have a tighter stop loss. You know, that's completely up to you. But if you're looking at a swing trade, quite like the idea of looking at, or for me personally, I'm looking at this silver kind of pull back into that area. And then, you know, if we get higher up, let's just say I put a volume profile on from here to here. If we get higher up, then there's an opportunity to potentially trade that, right? Let's see if it'll load in. There we go. Because we do have point of control right up at that sort of 30.95 handle. Okay. But I quite like that setup, to be honest, from my point of view. Hello, Ratish. Hope you're doing well. Does that make sense so far, guys? If it does, leave a thumbs up on the video. I'd really appreciate getting some likes today. Lets me know that you're enjoying the content, enjoying what I'm showing, enjoying you know, kind of getting a little bit of a deeper understanding of the market, right? That's what we're trying to do here. We're trying to show you a deeper understanding. You know, if I go over to, let's open this up, go over to some seasonal patterns. Here we go. Just go to, we can take a look at the seasonal pattern on silver, right? And it hasn't really been following a seasonal pattern, because typically we would see through the month of April, May, and June, we would see bearish price action, and then July would see bullish price action. We really didn't have that through May, right? We had quite the opposite. So if I just go here, May, negative, we can see that typically when May is negative, we get a negative June, right? And then we still tend to get a little bit of a positive July. So really speaking from a seasonal point of view, this market is a little bit on the sort of bullish side. But again, we're not really seeing that aggressive bullishness coming in. Okay, so that's one counter sort of move to our idea that the market could potentially start to become a little bit more bullish. Okay, which I like the idea of being bullish silver, but I like the idea of being bullish silver down here, down at this $29 area. If I go to that weekly chart, if someone said to me, where do you want to buy silver? I want to start buying silver down towards these weekly swing lows. Try and trade that range play. Okay, hopefully that makes sense, guys. But let's go over to the dollar index. Dollar index, super interesting market right now. Okay, we've seen a nice breakout of this trend line support. We've broken to the downside here, very strong 2 weeks of selling pressure. But we're at this 104 area. We're at the 104s, 103.90s, where these lows formed back in April. And price is just starting to recover that move that we had yesterday. If you look at the daily chart, we had this really nice bearish close outside of the zone. And I think a lot of people now will be trying to pile on this potential move to the downside here for the US dollar, which could leave retail a little bit vulnerable to some upside risks. Now, I still like the idea of being longer term a little bit bullish on the US dollar, but short term right now, we can't ignore the price action. We can't ignore this. We can't ignore the fact that we're getting these significant lower highs, lower lows. We can't ignore the fact that the CME Fed Watch Tool is pricing in a 98% chance of a Fed cut, cutting interest rates in September. So we can't ignore that. And that could reduce the value of the US dollar. Okay, that could reduce the value of the US dollar. So now we've kind of broken in this zone. What I'd really love to see is a secondary close below the zone, because that would make me think that there's possibility of us reaching this 102.50 handle. If we go to the weekly chart, you know, we're still technically within this overall range in the market, right? If we look at it all the way back here, market's been in sort of a long-term range since November of 2022. It's just unfortunate. I thought we would reach that 107 before we did start to see a significant turnaround. Just didn't get that in the end. Instead, we kind of just about touched these opens and closes of the market that formed back in April and May. And then we had that rejection and a continuation to the downside. So just didn't not understand, but didn't see the sell-off come in as early as it did. I wanted to see that 107 before we saw a little bit of profit taken or a bit of a turnaround within the market. So now we're at another crucial point. So you've got to ask yourself the question, do you want to be a buyer or do you want to be a seller of this market? Now, if that's me, I'm not selling at support. I'm not selling at support. I either want to see support broken to give me confidence that sellers are taking on the market, or I want to see a pullback before getting involved with anything there. Let's touch upon the VIX. Volatility index still below the 50 moving average at the moment. The average of the VIX has been very bearish, right, which has helped the stock markets move higher. So definitely have a little look at your VIX index. So I'll just put this on a daily chart. Let me just delete some stuff off of here and I'll just show you. Let me just do this. I'm just going to compare it to the S&P 500. And with the S&P 500, I'm just going to pin it to the scale there on the left-hand side, right? So typically, as volatility rises, the market moves away from risk, right? It moves away from risk. Now, buying the stock market is considered risk, right? It's what's considered a risk on. And if you look at the correlation between when the VIX rises and the declines in the S&P 500, you'll see some quite interesting things. So here we had a period of the VIX rising between, when was that? April of 2024, and we had this decline in the S&P 500. When the VIX started to decline, look what happened to the market. The market rallied. We had a period of where the VIX here had a little bit of a run higher. Okay, and look what happened to the S&P 500. It declined. Markets then moved higher as the VIX was lower. What have we got now? VIX is starting to rise again. Okay, so is this giving us a picture that we could potentially see a little bit of downside in the S&P 500 because the volatility index is on the rise? What I would like to see, we've broken this high, which is nice, but I would like to see price try and break through this high. I think if we broke this high on the volatility index, it would lead to something more than sort of likely that what happened back in sort of April time, where we saw a significant decline in the S&P 500. I mean, that was a 9% decline in the market. If we're looking at a 9% decline from the high to the low, we're looking at a potential S&P 500 coming back towards this range here, which would be towards sort of 5,300. Do I think that's going to happen? Possibly not. I actually think we're probably going to, if we do see any downside anyway, probably bottom out around this kind of $5,500 level. But it's just interesting to see, interesting to see. The committed traded data is quite interesting for the S&P 500 as well, reducing those long contracts quite aggressively. So I'm interested to see whether we do see a little bit of a play to the downside. But I thought I'd just give you a little look into what happened. Obviously, when the VIX spikes, you get a little bit of decline in the S&P. Is this going to be a sustained spike, though? Even though we were getting spikes back through 2024, price still had a good rally, right? So, like the idea of potentially being on the side of this market where we look for a little bit of an advanced short. I'm just liking the kind of $5,500 level as an area to target. So if I just delete this for now, and we'll just go over to the S&P 500. Okay, this is the situation on the S&P 500 right now. Let me just bring up a weekly chart. Now, the weekly chart doesn't look bad, right? Doesn't look bad at all. Market has been trending nicely to the upside. Really nice bullish candlesticks. Doesn't look bad at all. Doesn't look like we're going to see that huge pullback. So, like I said, if we're going to see some repositioning, I'd like the market to be down towards this $5,500 area, because I like the idea of being a buyer in this sort of volume point. Obviously, the market's paused here for whatever reason, and then we've continued to drive higher. So something like that I'm interested in when it comes to the S&P 500. Now, if we go down to the lower time frames, daily is bearish, go down to the 4-hour time frame. Look what we're getting here. We're starting to get a little build up of consolidation, which is great. If I go to a lower time frame, we might be able to kind of span it out a little bit, right, in this area here. That's accumulation, right? We're getting an accumulation of buyers and sellers in this area, which is great, because if we get a breakout, then it could lead to one or two things. Now, we're favoring more of a downside break right now because of the rise in the VIX, because of the idea that we could be looking at an area of demand down towards this zone in here. So, you know, I'm favoring, or my bias would rather be the downside, because I'm looking for longer term sort of long opportunities. So keep an eye on this one, S&P 500. I know we've done a little bit more different analysis today, in terms of we've started with silver, gone on to the S&P 500 and a little bit of the US dollar, but definitely something to, I would say, just keep your eyes on, keep on your watch list, and see if anything kind of comes from that. I can see a couple of messages. Hi Ratish, hi Ryguy, hope you're doing well. Let me know what you guys are trading, right? I was looking at some potential Kiwi shorts in the market. So we were talking about Aussie Kiwi long the other day. This is the position that I'm in at the moment. Just gone sideways. I've ended up actually, this was the position, sorry, that we spoke about on Tuesday. I've closed my position on this in a small loss. And I was also long Euro Kiwi, and I come out with a very small profit. And Pound Kiwi, I came out with a very small profit. I like the idea of being Kiwi short at the moment. We're just not seeing it being reflected across the other charts at the moment. So I'm keeping an eye on this, because I'm eyeing up a potential Kiwi dollar short at the moment. And again, if I just kind of bring in the commitment of trader report data, let's have a little look at the New Zealand dollar. So you can see here, not quite giving us like aggressive short signals just yet, but we're kind of in that zone where the short signal kind of comes in. It's like 10% or below. So looking at the New Zealand dollar, it could be getting ready to have a nice little sort of short option. And we have had sort of a hold of a short for the past few weeks. Just not seeing that reflected in price. And it's obviously because the dollar's weakened, right? Because the dollar weakened, we haven't really seen it reflect in price. If you look at what's happened across the board in terms of New Zealand dollar over the past 2 weeks, yes, it's weakened against the euro, the pound, the Australian dollar especially, it's weakened against. It's just, is that momentum starting to fade a little bit? You can see we've come off the sell signal lows, and because short contracts in the commercials have decreased, long contracts on the commercial sides have decreased. Could be a little bit of profit taken in terms of that. Vincent, pound CAD long, your thoughts? Yeah, we'll go take a look at that. Looking for a pound Aussie short, but I'm waiting for the daily close. Yeah, like that opinion there. Wait for that daily close. Yeah, pound and Oz, very interesting at the moment. There's actually a huge sell signal on pound at the moment when it comes to the COT data, because obviously we've had that sort of rally up into the 1.3 handle. I like a little bit more upside. I wouldn't mind seeing it come into the 1.31, 1.32. But you can see here, the last time we kind of had one of these sort of sell signals officially was back here, back in the sort of start of July. And the market sold off quite impressively there. But I'm looking at the short contracts from the commercials. They're not that high. Again, you know, I like to look at the extremes when I'm looking at these. So fortunately for us, we're allowed to just kind of click on and off on here. And then I'm looking at sort of, there's an extreme, right, in terms of short contracts, which was 183,000 short contracts. And if we reflect that with what happened with price, you can see over 1, 2, 3, 4, 5, 6, 7 weeks we had downside in the pound. I'm not seeing those short contracts being reflected here. So what it tells me is this really commercials getting aggressively short, or is it just the fact that we're seeing maybe the fact that they've decreased long positions and their short contracts have gone up a little bit? You know, it's not really kind of giving me toppy vibes just yet. You know, I want to see little bit more upside before I look to get short. The only thing we can look at is the managed money. Right, if we look at the managed money, which is the non-commercials, you can see their short contracts fairly low, long contracts really aggressive. They tend to add in aggressively at highs. And you can see if we look back here, this was the sort of proper sort of, I would say, signal which came here back before July. It's just that the short contracts on the commercial side, not quite at extremes yet. So that's why I think we've still got a little bit more upside in cable right now. Very similar to the Australian dollar as well. If I just open the Australian dollar up, you can see we've got this sell signal here on the Australian dollar. But why do we have that, right? Okay, and I always kind of want to ask myself the question, why do we have that sell signal? And, you know, it's a good thing that we've got this little map down here because it's showing us what both the long and short contracts are doing within the markets. Now, long contracts from the commercials decreased significantly. Short contracts have gone up significantly. If we go and take the long contracts up, are we looking at a very aggressive short coming into the market? And I like to compare it to what's happened before. And we haven't seen short contracts on the Australian dollar as high as this since, what, 2017? Right, so you're looking at this kind of area here, and that I can give you an exact date of when that was. That was September 11th, 2017 was the last time we saw short contracts up at this level here. And this is what followed in terms of price action. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, sort of 12 weeks of selling pressure there for the Australian dollar. Now, interestingly enough, though, on the Aussie side of things, the RBA are looking to hike there rates, right? There have been no real sort of doubt in anyone's mind that the RBA are looking to hike. And I mean, if we look at their sort of employment figures that came out today, unemployment rate came in at 4.1%, a little bit higher than what was previous, which was 4%. Employment change came in at 50.2. So employment's still fairly healthy, I would say. Employment's still fairly healthy. Obviously, an unemployment rate climbing is not very good. But at the moment, they've got an inflation problem. So there could be a little bit of a battle here. Whether this short signal plays out or not would be really interesting to watch over the next couple of weeks, because obviously what we want to see is, this type of signal, right? Very aggressive shorts coming in from the commercials. Like I said, we haven't really seen that type of signal since 2017, where we had this nice little sell-off in here. I mean, obviously that sell-off followed that. But yeah, looking at sort of the commercials as well, very aggressive longs, the managed money. So typically these are the guys that you want to follow on a day-to-day or a week-to-week basis. You want to be following the commercials. They're aggressively getting long in this market. Okay, I just look at the commercials when I look at a market top potentially forming within the market. And yeah, very interesting to see that we're starting to get to these types of levels on the Australian dollar right now. I feel like we could get a little bit toppy on that market. So yeah, hopefully you've been enjoying this little bit of a breakdown. You know, one market that we could particularly look at is Aussie Swiss, right? We talked about pound Swiss, but we could be looking at Aussie Swiss as well. I'm going to come over to Vincent and Ryguy's analysis in a moment. Yeah, Beatrice, I'll go through cable in general as well. But look at the Swiss franc. Swiss franc aggressively getting long on the long contracts here. Again, not like aggressive extremes, but still at levels where they were buying down at the 1.1s. Now you've got to, this is a Swiss franc futures chart. So if you're looking at it via dollar Swiss, you just got to invert it. And this is the same chart basically when you invert that. And you can see that they're not really getting short right now. They're getting long. When we look at the managed money, they're getting short because they like to follow the trend essentially. But we've got a potential top signal for the Swiss franc. So let's get back into some charts. Like I said, Kiwi, I like the idea of being short on from a commitment of trader point of view, I've got an alert set down here. We've got one of these patterns again, which we talk about quite often, where the market finds a base, finds support in the market, and then we've tried to find buyers, and we've just get rebutted every single time. The market comes in higher, rejection. We've got lower highs coming into this area. So if we fail to break highs, then a breakout lower, I feel, is more likely. And that's what I'm kind of looking at here on the New Zealand US dollar. But if we go take a quick look at the pound US dollar as well, and then we'll move over to the cross pairs. So let's go over to cable. So cable heading higher, was heading up towards that sort of 1.3 handle, kind of tapped into it. I mean, the highest point was nearly 1.3050, so it's around about the 46s. Come up into this level now. Really interesting area again. Very aggressive buying coming in from the market. And, you know, I don't see too much change in that. I think the only problem we've got, like I said before, is we've had a lot of dollar weakness in the market. Are we going to see institutions and things like that starting to take profits on those moves, right? This would be a perfect place for them to start doing that. When the market feels like the dollar is going to continue to drive lower, this could be a perfect time for them to start buying US dollars again. So I'd just be a little bit wary of trying to be a buyer up at these swing highs. I'd much rather see lower prices coming in before trying to get involved with it. But, you know, this could just continue. This could really just continue higher. We've got this upward trend forming. I've been pretty wrong about pound in terms of the fact that down here, I thought we'd come down and see 1.2550 before seeing a move higher. So you might want to take the information I'm telling you right now with a little bit of a pinch of salt, but we've got this really nice upward trend forming. You know, we were long on pound CAD, which did about 350 pips now, which is, I think, still going. I haven't actually looked at the pound CAD price recently, but that's still going. But we've got this area in here. Is the market going to find support and trade out of that? You know, again, what can you be looking for? Considering this is a 4-hour time frame, you could be going down to your lower time frames and looking at the breaking structure, because if the market is going to start pushing higher, you'd likely see higher highs and higher lows come out of your lower time frame. We haven't got that yet. Market is still fairly bearish right now. All you've got is the fact that we have this minor consolidation down in here, which is volume, very aggressive buying, and we're back in that zone. So this just could be a good area to wait. And then if you get like a break of these highs, you could get something like that on cable. Okay. I would only be buying this on a day trading situation. I'd want to be in and out. I wouldn't necessarily be swing trading this right now, because when you're looking at your stop losses, where you're going to be at, where do you put them? You know, arguably, do you try and put it below that 129.60, or do you try and stuff it in below that 129.33? Do you have the risk reward ratio is what I'd be looking at. Let's say you bought above that candle high to be safe, stop loss below that. You could get a decent risk reward out of it. You could get a decent risk reward if you're looking at something like that. So yeah, maybe there's an option for you there on pound US dollar, for an idea of a long there. Hope that answered your question, Beatrice. Afternoon, Matt. Pound CAD. Let's go take a look at pound CAD. We have been fairly bullish pound CAD for a while, ever since this 174.32 handle was our entries into this. I didn't get anything out of this because I entered it a little bit too soon and got stopped and then didn't get back in. But price has gone 387 pips to the upside, and that was all from currency strength and weakness analysis that we looked at. We like the idea of pound getting stronger, CAD getting weaker, and yeah, it's done 380 pips into that 178 handle, and now we're at resistance. And you know me, Vincent. When we're at resistance, I sit on my hands. I don't want to get involved in this little area here because we've had a significant sell-off in the past. Looking at that commitment to trade report data as well, you know, do I really want to get long in this market right now? Probably not. Probably not. I want to wait a little bit. I want to see how the market reacts, because if we start sort of seeing price break these types of areas, then I think we're going to see a little bit of a decline. You know, I'm still trying to look for that CAD signal really, for buying on CAD. We're just not seeing it at the moment, although we are starting to see potential longs coming in from COT reports. But yeah, trying to get long pound CAD. I think if you're going to do it, again, just be very cautious of time frame that you're doing that. I would probably be looking at this lower time frame, trying to figure out if there's a good sort of area to just buy up into these types of highs, maybe even perhaps back into this kind of high there. I'd be trying to just day trade this really. So yeah, look at your 15-minute time frame. Do you start breaking through areas of trend? You know, that's what I'd be looking at. Does price breach through these highs, clear those sellers out the way, and then go and target a little bit of a move higher? I could even argue this is a good target in here, where you had that selling pressure coming into the market. So yeah, I'd just be a little bit cautious with this. The market's moved a hell of a long way. You know, if we look at the daily chart, bring in the stochastics, you know, we're in that sort of overbought condition. Don't get me wrong, you can be in the overbought condition for a very, very long time. You know, here we were overbought and the market went a significant way to the upside. So it can do that. It's just that move there is quite aggressive and quite sharp compared to this move here, where we had a very kind of decent just build up in price action. So yeah, I'd just be a little bit cautious here. Again, we've got that kind of triangle pattern, haven't we, where the market's based. We're starting to get lower highs in it. So if that's the case, then the market might want to trade lower out of here. So I'd be careful of longs on this one for me. Pound Aussie. Let's have a little look at pound Aussie. Delete these off. Pound Aussie, very similar, right? Look at all these pound charts now. They're becoming a bit toppy, right? This gives you a big insight as to what's going on. Pound pairs are hitting resistance. And remember, whenever I talk about minor currency pairs, you're looking at the two majors versus each other, right? You have to ask yourself the question, is pound, if you're doing it just from a technical point of view rather than a fundamental point of view, go to the pound. Where is the pound? Is pound technically at resistance? Yes. Go to the Australian dollar. Is the Australian dollar at support or is it at resistance? Well, I would say arguably Aussie US dollars at support. What can we deduce from that? Well, we could expect maybe pound Aussie to move to the downside, because the Australian dollar's at support, pound US dollar is now at a key resistance point, right? So you could be going to pound Aussie and saying to yourself, well, if I've got that, where is pound Aussie? It's at resistance. So you could be looking to be short pound Aussie just from a technical point of view because of that information there. Where you want to get short is where you want to kind of look at building a picture of what's going on. So you can see we consolidated up at the sort of one spot 93.50s. Is that a good area to potentially look for a short? Could the market do something like that, right? We could argue that if we just see a breakout to the downside for pound Aussie, then you've got this little area here that could be like that. Okay, a little bit of consolidation in there. Consolidation brings in that volume, right? Market could break and retest that. So a couple of different options there. I would not really be looking to buy pound Aussie right now, I don't think. So I like your thoughts there, right, guy, on being short. Daily chart close, like that. You know, I always like to see the daily close bearish first, and then you could even argue looking for like a, I don't know, a fib retracement of that, like a 50% retracement move up into that 193.13s for a potential move lower. But yeah, that's the way I'd be looking at that right now. I'd be looking at the fact that you've got pound US dollar being at resistance. You've got Aussie US dollar being at support. Could you see a move there? I mean, Euro Aussie could be a good one to have a little look at. It's kind of missed my alert. So 162.90s was my alert. I quite like the idea of price trying to come back into these volume areas up in here, and it's kind of missed out. So I'm going to take a look at potentially getting in on short this one tomorrow, because we're now starting to see a nice little bit of a breakdown here on Euro Aussie. You've got, again, look, markets drove lower. What's it done next? It's consolidated, and now it's been breached. So if I go lower on a 30-minute time frame, really nice setup here. You've got this volume that could be targeted with price. You know, if I was trading this right now, I would try to probably get a little bit of a short on the break there, with the opportunity to try and trade it back to the 161s. But I've missed that break now, so I'm going to have to wait for some kind of pullback on this. So yeah, I'll wait to see how the daily closes, right? I'll wait to see how the daily closes, because I like Euro Aussie short. Why? ECB are looking to cut rates. RBA looking to hike rates, and I think the market's going to look to try and price that in. We've been very bearish Euro Aussie over this period through here, which was really nice. Took some good shorts in at 61.30s as well. Came out towards these areas, these lows. Looking for another kind of swing on that. Look at the weekly chart. Where have we come back to? All this kind of weekly price action. So yeah, I like the idea of being short Euro Aus down into this sort of, I mean, ultimate targets would be sort of 159, but you've got to take these as zones, right? They're not just going to be horizontal levels. So anywhere in there, I think is pretty good to take some profits on Euro Aussie. But yeah, I like that Rye guy looking at pound Aussie short. I like that. I like Euro Aussie short. Like I said, I really liked Aussie Kiwi long. It just hasn't been playing out right now. And I'm out of this move, right? I'm out of this move. I came out with a loss. But it looks to be starting to shape up in the right way. You know, if I'm looking to kind of reposition myself into this market, you know, where could it go to? And I always ask myself the question, where could this price action go to? The only thing that concerns me is that like price has kind of failed to get above that. I like the idea of price coming all the way up into these levels on Aussie Kiwi, but that little close below that zone should have really made me wait a little bit, but it didn't. But look at this. I talk about this all the time as well. Look at how shallow that price action is after a rally. Big rally, very shallow price action. So I still quite like Aussie Kiwi longs, I must admit. I'm just kind of waiting for another entry into this, whether that be a consolidation breakout or something in this zone, you know, break above this kind of 1.1, then I'll probably look to scaling again and try and get on the back of this, because nothing really has changed here for me from a macro point of view. The only thing I can kind of point to right now is yesterday's close wasn't great. Ultimately, why I closed the position out was because yesterday's close was aggressively bearish. That's not how I build my currency strength meter. You know, I like to see bullish closes and then try and trade off the back of that. Just having a quick look around. Yeah, Aussie dollar's actually really interesting me now. Got a bit of a pullback there into this zone. Let's have a look at the 4 hour. Again, very strong bullish 4 hour time after a sort of rejection of the previous lows there. Look at that price action. Very shallow, very, very shallow candlesticks on the 4 hour time frame. So yeah, I'm kind of liking this Aussie right now. I'm not going to lie, kind of liking it again. Quite like that one. Let me know what you guys think about it as well. Bongo, welcome. EuroCAD, please. I would love to sell it. You would love to sell EuroCAD. Okay, let's have a look at EuroCAD. Why would you like to sell EuroCAD? Let me know. Hi, Joel. I haven't covered gold just yet, so stick around. I'll cover it in a moment. We'll just go through EuroCAD, and then I'll go over gold, and we'll have a little look at what's going on in the gold market. I mean, we're seeing a bit of a CAD sell-off at the moment, and I'm not sure why. To be honest. It's obviously because the Bank of Canada are looking to decrease interest rates again. They're priced in to do it again in the next meeting, which I get. Unemployment's been rising. They want to try and bring unemployment down. That is one of the mandates of a central bank, is to have full employment. So if unemployment's rising, it's not good. They want to try and cut interest rates. Obviously, they might be trying to support the Canadian dollar against the US dollar, essentially. But yeah, the COT reports are telling me one thing. The seasonals are telling me one thing. If you go look at oil prices are rallying as well. I just think CAD's ready for a big turn. It looks overbought. Yeah, okay, that makes sense. Yeah. So I'm also kind of looking. I don't know whether I'll go sell EuroCAD right now, but it'd definitely be on my sort of radar. That level looks sweet, doesn't it? That 1.5 level. Whether you get it or not, I don't know. But that there looks very good. You've got overbought here on the stochastic as well. We've kind of come into this kind of area of volume, but we've already tested that, so I'm not really bothered by that. Let's go to a 4 hour. Let's just see what was going on. Yeah, I think the one thing you can look for, right? The best thing you've got time, right? You've got time. Look, we're in this upward trend. You want to sell it, right? But you've got time. The market is in an upward trend. You don't need to get on it tomorrow. Market could continue to trade higher. And then what you're looking for is that turn. When you get that turn, that's the idea then. If we go look at where it turned down here, market's making lower lows, lower highs. It then turns. We get a higher high, higher low. That's the, boom. That's the move. Very similar over here. You're getting higher highs, higher lows. It turns. Then there's the short. So you've got time with this. You've got loads of time in the world. Just keep it on your watch list. Keep patient with it. Ideally, you'd like to see more upside if you're going to sell it, obviously, because you're getting a better price. You're getting more market information. I'd be watching this. This little zone in here would be really interesting, because if price rallies from there and then breaks, it could be a good reversal sign in the markets. If we take a look at volumes in that section, big volumes. That's like the second largest volume out of that whole move, maybe the third largest volume out of the whole move. So if that gets breached to the downside, we could see a good little reversal from there. Right, guys, looking at gold as well. If it pulls back to 24.20, Bongo, yes, I want to sell the pullback in order to catch the overall long to those previous highs. Yeah, like it, Bongo, like it. Yeah, so have we covered gold? Joel's asking to look at gold. No, we haven't covered it yet. We've covered silver a little bit. We like the idea of short silver. Is that going to be reflected in these gold prices? Now, obviously, gold, very hot commodity at the moment. We've just breached into all-time highs, right? And look, commitment of traders report, still a lot of buying going on in gold, right? Still a lot of buying, not especially from the commercial side. Definitely a lot of buying going on. Now, do I think that we should have got long down here? Probably. We did talk about a couple of breakout opportunities in terms of the consolidations that formed within the market. There was two really good consolidations. The first one being this one, where we talked about buying the breakout. That one worked really nice. Didn't get the retest, unfortunately. Price traded higher. We then had a triangle pattern where the market's lows get higher, and then we broke that. That would have been a really good entry as well into getting long. But ultimately, we were trying to target this little zone in here, and price broke and got there really nicely. What would I do now, though? What would I do now? That's the question, and what would other traders be thinking? would we have broken this, and would there have been a lot of buy orders coming into the market, right? That's what I'm waiting for. I think the next release of the commitment of trader reports might be today, actually. It might be today or tomorrow. Let's go to the CFTC website, shall we? Shall we have a little look? CFTC. Let's have a little look at when they are going to bring out the latest release. Commitment of traders. Go down to the left-hand side, release schedule. Let's have a look. So we're in July 19th. So tomorrow we're going to get the latest report of the commitment of traders, right? So we'll see where they're positioned. We'll see where they're positioned in the market. Because essentially what you want to do, by the way, guys, if you do want to try and get this data yourself, go to the CFTC website, go to market data and economic analysis, go to the commitment of trader reports. This is absolutely free. I don't know why people don't use it more often, but you want to come to the CME, Chicago Mercantile Exchange, and just hit short format, and this is how you get it, right? Okay, so you've got your asset there, right? You've got your non-commercials, your commercials, you've got your long, and you've got your shorts, right? And then it's just giving you the long contracts versus the short contracts. And then it also gives you the percentage of open interest change. And you also get the non-reportable positions, right? Now, a lot of people would say, you should ignore the non-reportables. I'm a bit in that camp, but the non-reportables can be good when you're looking at reversals in the market as well, because they tend to add a lot into those positions. But let's go down. So look at all you get. So these are all the futures market. So you got butter, milk, lean hogs, if that's something you're interested in, live cattle, lumber, cheese. But here you go. You got Canadian dollar futures here, Swiss franc futures, Mexican peso, big short coming for dollar peso, I feel. Japanese yen, euro pound, New Zealand dollar, Bitcoin, even, because you got Bitcoin futures now. And then we can come all the way down, and you can see how big this is, and you can see why people don't download it. But I do think it's quite good for you to have a little read through this and maybe just kind of create your own spreadsheet and have a little look at them. Nikkei, S&P 500. I've either skipped past gold or gold's not on this one. Let's go back. Yeah, if you want to find this is the link in the chat. Okay. And they do break it down into like products as well. So you've got metals and other as well. So you've got palladium, silver, gold. That's micro gold though, isn't it? Here we go. Gold, commodity exchange, positions. So you can see how when it's like this, it's really hard to kind of break down what's going on. So that's why you can use kind of third-party resources in terms of things like, Markets Made Clear or barcharts.com or even Cot Report Simplified, right? You can come over to there as well. But if we go take a look at, I'm just going to close all these down and I'll bring up gold. And this is why I think gold prices are still going to continue to climb for now. We do have short signals, but we only have it on a 6-month and 18-month period. We don't have it on the 36-month. And this is something we've been talking about. Again, we're not really at extremes when it comes to the short contracts, right? And that's what you're looking for when you're looking at the commercial dealers. So we get rid of the net here and we get rid of the long, because commercials aren't going to be long, right? They're not going to be long because they're going to be making more money. They're the producer, right? They're the producer, or they're in the business of gold. So as gold prices rise, they're going to sell more of it because they make more money, right? That is just as simple as it can get. What I look for when it comes to the commercials is extremes. You know, what extreme are they selling at, and what extreme are they buying at, right? Now, if we look at the gold prices, right, when was the last time we really had a significant short position held by commercials? It was all the way up here, right? We're looking at sort of 440,000 contracts. I think we've talked about this multiple times before. We've even looked at it on other websites and things like that. It's just that this kind of breaks it down quite nicely. 440,000 contracts. Now, when we got there, this is a weekly chart, remember? Price fell from $2,000 all the way down here, right? And that was what, around... let me just have a little look. Open, high, low, close. So the low was around $1,600. Okay, it's around $1,600. So we had a $400 decrease when short contracts were up here. If I look at the extremes, the short contracts right now, they're not really at extremes, right? So this is why I feel like this gold rally is not done yet. I feel like we're still going to see rallies in gold. So from a managed money point of view as well, if we look at the non-coms, right? Are they adding shorts? Yeah, they're adding shorts because they're probably taking some profits, but they're still very much long, but they're not long at extremes like I'd want to look for. If we got to here, right, in short contracts, that's where I think the top in gold is. Okay, just to kind of give you my opinion, that's where I think the top in gold is. So how do you trade this information, right? So you're looking at potential long ideas still. Now, this could be trend ideas. It could be anything like that. We're quite a way away from the average right now. So I'd be looking for any kind of breaks in trend. So, you know, you could have a little bit of a trend line break out here for an opportunity to the upside. You know, looking at it from an hourly point of view, it looks like we've kind of come back into this sort of demand zone, and the market started to rally from that point of view there. So multiple different ways that you could look to potentially trade that information. Look at that 30-minute close there, right bang on 2:30 as well, where the open is, that close at 3 o'clock, you know, is showing some bullish sentiment. Now, obviously, you can go down to the lower time frame. You know, what you could look for really is price has rallied, pause there. Could that be your area of short-term trading opportunity here on the 5-minute time frame? But if you're looking at more of a swing play, you know, quite like this hourly setup. Would I like prices to come in a lot lower? Yeah, because that would be better price for us to get in on. So maybe this 2440 zone. I think was it you, right, guy, who was talking about 2400 to 2420. I mean, 2420, 2400 would be a lovely price to get in, wouldn't it? You know, you got that consolidation zone in there, which would be super lovely to get in on. So, yeah, anywhere in there would be great. Do I think it's going to get there? Probably not. I think you're probably going to see just a continuation of this. But you never say never, you know. That's why I say probably not, because you can never say never. And if price does want to come down a little bit, I think it will just be eaten by buyers. I just think buyers will want to get back involved. So, yeah, I don't think there's a market top yet in gold. I think we'll still see some further upside. At 1.5 on EuroCAD looks good. Need to see buyers fading though. Yeah, absolutely. Yeah, hopefully you can see the link in the chat for that, Rod guy. Also, what do you think of a short dollar yen? I know it's been about an hour we've been going, so it's okay. We don't get to it. God, it has been an hour. God, I've been talking for an hour. I can't believe it. It's actually flown by. But let's have a look at dollar yen. We'll finish on dollar yen then, right? So I've been looking at $157 yen for a while, and the market has just completely ignored it, right? No worries, CG. Catch you later. Have a good day. Have a good weekend. Market's completely ignored it. Completely ignored 157. In fact, it's kind of coming a little bit lower towards this area here. This is a kind of third spike out, 155.80s. But, you know, again, are we going to see buyers start stepping in on this? I like the idea of buying this market. Do I want to see it kind of bottom first? Yes. Yeah, I do want to see it kind of bottom first. I want to see the market try and at least sort of slow down a little bit. If we go look at what happened last time, you see this kind of build up in here. The market had a few sort of continuations of that downward trend before seeing a move higher. And I just want to look for the exact same thing. You know, it's boring, right? It's not fun. You have to wait and you have to be patient. But, you know, that's why, because you wait for price to kind of match your bias and then you look for your long positions. So, yeah, for me, I like the idea of being a buyer on dollar yen, but which, you know, it's really hard to call a market bottom, isn't it? Is this the right place to start buying it? Not sure. You know, I thought 157 would be a really good place to buy it, and it wasn't. The market flushed through that level. So I've got to wait now. Got to wait for a bit of price action to come back in my favor. You know, the minute is still looking very, very bearish here. I mean, believe it or not, the currency strength meter was kind of screaming for this. Screaming for this little move. I just, again, decided to ignore the currency strength meter, which we've been over time and time again that I shouldn't do, because it doesn't lie to me. It doesn't lie to me. And this is what the currency strength meter was pointing at. We were in that reversal pattern, and we were starting to see yen strength slightly coming back into the market. You know, last week, really going down from these kind of -7s, -6, back to the -5. That is what I typically look for to start looking for that reversal. And, you know, I ignored the yen move because I just felt that you know, it was almost like, when's that intervention going to come in? We don't know. And it's took intervention to really start to get this going. So, not surprised that we've had this move. But the thing is, you know, I do feel like because of the monetary policies involved with yen at the moment, that we will still see yen weakness over a longer period of time. We just need to wait for this bout of strength to come away from the markets. So, yeah, that even might be at the end of this week, because it's changed against so many markets that, you know, you might even be looking at the end of this week that yen would be up at these +5s, and then it's like, you know, a bigger roller coaster of currency strength. But, you know, if we're looking at it from, when was that? That was the 8th of July last week. It was saying that we should be buying Japanese yen. We should be shorting it against the US dollar, the Canadian dollar, and the Swiss franc. So if you look at US dollar yen on the 8th, it was around here. And if we look at which one was it? Was it Swiss yen and CAD yen? If we look at CAD yen on the 8th, we were here. And if you look at Swiss yen, you were here, around here. Really nice moves. So unfortunately, we didn't get on any of those. But yeah, I'm just kind of waiting now, I think, Rogai. I'm just kind of waiting to see, is this sustained yen strength or is it going to fade? And at the moment, it's been sustained. We've had a big move yesterday, which could have been added intervention, to be honest. It could have been added. I don't know whether that's been confirmed or not, whether that was added, but a lot of selling of US dollars yesterday across the board. So I wouldn't be surprised if that was a bit of an intervention move as well. But yeah, I don't want to buy this right now. I want to wait. I want to see it kind of bottom out. I want to see it slow down, and then I want to look for a reversal. Yeah, time flies when you're having fun. Absolutely. I love this. I love this. Absolutely love it. I love looking at data. Love looking at the macro stuff as well. And I adore it. So yeah, I'm gonna leave it there, guys. We have been going for an hour and 10 minutes. Thank you, Ratish, as well. I appreciate you coming and stopping by. Everyone that's come today, we've got a lot more viewers, actually. I really appreciate you all coming to watch. If you could leave a thumbs up, I would really, really appreciate it. On any platform that you're watching, just hit that like button. And if you thought that it was something that you liked the look of and you're new and you're watching the stream, come and subscribe over on YouTube or follow wherever you are. I'm going to leave it there, guys. Thank you so much for attending. Have a great weekend as well. and I will catch you next week. Cheers.